Morning, guys. This is Mr. Chauke. I'm going to do paper one with you. I hope that at the end of this lesson, you'll be able to understand accounting much better. This question paper that I'm going to do is from grade 12. It was written in November 2021, and I've had a lot of learners asking me to do the balance sheet and also to touch on the incorrect net profit. I've made a video on the incorrect net profit before. You can check it in one of the videos that I've made, and most of the time that is how your paper one is likely going to be. And I'll also do the paper that was written in November 2022, but after I've done with paper one. So I hope that you guys will also watch it. So if you have not subscribed to our YouTube channel, please kindly do so now, as it is free to do so. You do not have to pay anything to become part of our subscribers. So now here they're saying we are given information, and they're saying that we have to do the statement of financial position, and this question costs you about 55 marks, and you're supposed to be done in 45 minutes, which is very important. When you do when you write any exam, you need to make sure that you pay attention to the time allocation that you're given. So now here they're saying that the information relates to the financial year that ended on 30 June 2021, and they're saying that the business sells formal clothing for men and women. So we know that the end of the year is 30 June 2021, so it means that the beginning will be 1 July 2020. So it's very important for us to be able to figure this out. Now the first thing that they want you to do, they're saying calculate the value of closing stock of formal suits that was omitted. If they're saying that something was omitted, it means it was not recorded. Okay, and they're saying that we need to sort this out from the stock sheets on 30 June 2021. So meaning that because this was not recorded, we need to record it as part of our inventory. Okay, and next they're saying that use the table provided below to calculate the correct net profit after tax for the year ended 30 June 2021. Indicate plus for increase and also minus for decrease. Okay, and after you will refer to information A to H to complete the retained income note as well as the statement of financial position. So now because here they're saying that we also need to note that adjustments from information C also affect the statement of financial position. So which means that those adjustments in information C, they are also going to affect our balance sheet. So it might be wise to also draw the structure of the balance sheet. And here they're saying that we need to show our workings, because based on your workings you are also going to earn marks. And they're also telling us that certain figures are provided in the answer book, which means that they've written them for us, so there won't be a need for us to write them again. And they're saying that figures are not required in the shaded areas, meaning that in areas where they've shaded, that's where they don't want you to provide your answers. If you look at this, shaded areas is one like this one, so there's no need for you to do anything. And also here, so now when you do your balance sheet, one of the things that you must remember is that you don't have time. Okay, so since this question is just one question and it goes all together, the wise thing that you can do is to also try and do the balance sheet while you're also doing the other question, because some of those things are going to affect your balance sheet. So for you to be able to save time, you need to be able to enter those things simultaneously so that you don't forget. So here we are going to have, we know that under current assets we're going to have our inventory. We know we're going to have our inventory. We're going to have trade receivables, right? So I'll just write abbreviations because I don't have space. And here we know we're going to have cash and cash equivalents. But remember, you as a learner, you don't have the right to use abbreviations. But because for me, I'm teaching and I'm trying to show you everything here, I will make use of those abbreviations. And in the equity section, we know that we are going to have, this will be our return income. Here we are going to have our ordinary share capital. Our ordinary share capital. And then here in our non-current liabilities, we normally know that we are going to have our loan. And then under our current liabilities, we know that we are going to have number one, we normally have our trade creditors or trade payables. All right, and then we're going to have our shareholders for dividends, our shareholders for dividends. Okay, and then we are also going to have our current portion on loan if it's given, current portion on loan if it's given. Okay, and then we also have something else. It can be our SARS, the trading stock already been recorded, so there's no need for you to record it. If you look at this, you will see that on the answer sheet there's nothing regarding trading stock deficit or surplus, so it indicates to you that that other part has been recorded, so you don't need to record it. Okay, now here they're saying the information of the formal stock of suits is as follows. They've given you the opening balance and the closing balance. Here for us as accounting students, we are interested in the stock on hand. They are telling us that at the end of the year they had 240 units, and remember they're using FIFO, and this is what they have purchased, this is what they have returned. So now, because at the end of the year they had 240 units, they are telling us that they bought these items. Some of them were returned, but we will look at the dates to get a clear idea. Here they're saying that the stock on hand on the 25th of May was 24 units. So we assume that this 24 units, because the purchase was made on the 18th, what was returned was the stock that was bought here. So because they returned 24 units, at the end of the year they will no longer have 230 units purchased there. So we'll say 230 minus 24, it will give us 206 here, so meaning that they had 206 units. And here, because this is supposed to be remember our units on hand are supposed to be 240, so if we say 240 minus 206, it will tell us how many units do we still need from the bottom. Remember we said we are using bottom up approach. We're starting from here going up until we get the units on hand that we want. So meaning that here we still need to collect 34 units for us to do our calculations. And when you do this, please show your calculations in the answer script. Don't do it on your calculator, because your examiner won't be marking what you did on the calculator, but rather what is available on your scripts. Okay, so the units on hand at the end of the year, we know from the stock of February, each unit was costing 2,600 and we had 34 units. So in the answer book, you must show this, that when you calculate that, you are going to say 34 units multiply by 2,600 and show them how much you're going to get from this. So if we say 34 multiply by 2,600, it is giving us 88,400. So meaning that this 88,400 will be the value of those units. Then you go back to your information and check what else do you need. Remember, we're supposed to have 240 units at the end of the year. So at the end, in February, you were left with 206 units left, and each of them was costing 2,850. So you're going to say 206 units multiply by 2,850, and then it will give you that particular answer. So if you say 206 multiplied by 2,850, it is giving you 587,100. From there, all you have to do is to add this so that you can get one figure. So we'd have 88,400 plus 587,100, or you can just add them here and transfer the answer here. Okay, so let's do it like that. So we have 587,100, and then we're going to say plus 88,400. Now it will give us the closing stock of those formal suits. It's telling us that those suits were worth 675,500. Now we must remember that this amount is not reflected in the trial balance, so we must include this in our financial statements that we are correcting now. So we're going to say our inventory will be plus 675,500, and then you are done recording that part. And then after that, we can go to the next set of the question. Remember, you were supposed to do the calculate the correct net profit after tax. So now I've made a summary that you can use to be able to do the incorrect net profit correct. If you are dealing with anything that was not recorded, if it's incomes, they are going to increase your net profit provided that they are within 12 months. If it's expenses, they are going to reduce your net profit. Remember, this information was not recorded at all. And if you are dealing with prepaid expenses, because this was overpaid, it made your profit to be low at that time. Now, because you're correcting, you are going to edit back. Okay, the other part, it's accrued income. Remember, accrued income, we are speaking about the income that you have not yet received but you were supposed to receive. So that income will make your net profit to be more. And then the other section deals with income received in advance. In terms of income received in advance, because you have received this income before time, what you are going to do, you are going to reduce your net profit because you have received more money than you were supposed to. And the other part, it's with accrued expenses. Remember, accrued expenses are expenses that we were supposed to pay, but we have not yet paid them. So what are we going to do? We are going to reduce our net profit. You will see that as we go back to our adjustments, they will revolve around here. And it's very important for us to be able to get them correct. So now let's go to those, to that part of adjustments and do them correctly. So here they're saying that the net profit before tax was 4,918,950, and they're saying that it was calculated before taking into account or correcting the following. So meaning that this is the incorrect net profit that we have. This is the balance that we are going to start by. We are going to make some corrections based on this amount. Sometimes they will enter it for you, sometimes you'll have to enter it for yourself, but here they have entered it for you, which is very good for us then, because we don't have to do a lot of work. So let's go back to that. Here they're saying that audit fees include 123,600. We know firstly that audit fees are an expense. That's what you need to identify first. We know that audit fees are an expense, and they're saying that they include 123,600, which was paid in advance. The moment they say paid in advance, it means this was prepaid. Okay, because of the keywords paid in advance for the next financial year. So meaning that these audit fees, they have actually reduced our net profit. If you remember from our salary, I said if you deal with prepaid expenses, you are going to add back that amount to your incorrect net profit. Why? Because you made an overpayment, so you must correct that and add back so that your things are within 12 months. So we have a positive 123,600, so that, which means that here we're going to say plus 123,600. But remember, this is a prepaid expense and this was not recorded in the balance sheet, so we need to also go back to our balance sheet and record the effects. Remember, prepaid expense are part of your trade receivables, so we're going to say plus 123,600, and then from there you are done recording the transaction. You can go to the next one. So let's see, what do we have here? They're saying we have information here about the loan repayments. They're saying that the repayments on the loan are fixed, meaning that they remain the same. Okay, and they're saying that per month including interest, so meaning that every month they pay the same amount of 35,000, and in this 35,000 interest is included. Remember, when you borrow money from the bank, when you pay them, you supposed to pay them what you borrowed plus the interest also. Hence here they're saying that interest is capitalized, meaning that you are charged interest on your loan balance. Okay, so here they've given us the closing balance as per statement, the opening balance and also the closing balance, and they've given us information about the payments, but they've not said anything about the interest, meaning that we have to look for it. So here they're saying that we need to provide for interest, meaning that here the interest of the examiner was in you being able to find the interest. Now, I normally teach learners that when you are given information like this, write it in this way. Write your opening balance. Remember, your opening balance would be 4,175,000, and then your repayments. Remember, they will reduce your debt. and we were given only repayments per month of 35,000. So if you say 35,000 multiplied by 12, because we're doing something for the entire year, it will give us 420,000, right? So now we will then, after you have paid this, they will charge you interest. So your interest will come here, which is a question mark. We don't know it at the moment, right? But you have your closing balance. Your closing balance, according to here, is 4,028,000. Now remember, normally we would say opening balance minus repayments plus interest is equals to closing balance. So because now we are working bottom up, remember you are trying to find the missing figure, so you will do a reversal of what they were doing. You'll take your closing balance, you add back your repayments, you subtract your opening balance. It will give you the interest that you're looking for. So that's what we are going to do. And when you do this in the incorrect net profit, please show your workings so that you can earn max. So remember, we agreed that we are going to say closing balance, which is 4,028,000. We said we are going to add back our repayments, which is 420,000, right? And then we said we will minus the opening balance, which is 4,175,000. And then remember, because this is an expense that was not recorded at all, it means that this will be in brackets in the normal way. Like I said here, that if an expense is not recorded, brackets. So that's what we've done. Okay, so let's get that amount quickly. So if we say 4,028,000 plus 420,000, and then we subtract 4,175,000, it will give us 273,000, which is the interest that we are interested in. Now here, we will wait a bit on the balance sheet, okay, because the instruction was that we need to just get the interest. We'll wait a bit on the balance sheet because we were just focusing on the interest. So I hope you understood that part. And then as we proceed, the next section says that rent income of 74,000 was received from a tenant for the period 1 July 2020 to 31 August 2021. Remember, our year starting on it's starting on the 1st of July 2020, and they're saying that this has been recorded, and they're saying that this amount takes into account a reduction of 750 per month from the 1st of May 2021. Okay, so we need to firstly check how many months have we received the rent. Let's start. We've received it from, remember our timeline will be July, August, September, October, November, December, January, and then February, March, April, May, June. It's supposed to be 12 months from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So it's fine. Anything outside this will be received in advance. So if you check here, we have received it up until the 31st of August. So meaning we have received it for July and also August. So this gives us an idea that our rent income has been received for 14 months. So we know that it has been received for 14 months and is 2 months received in advance. So what can we do? We know that because that if the income was received in advance in the incorrect net profit, we then supposed to make a deduction. Okay, so we put a huge bracket so that you don't forget. Now we need to ask ourselves, how much was the rent? They said here that the rent was 74,000, and that reduction was 750 starting from May. So remember, it will be May, June, July, August. So the reduction affected 4 months. So if you say 750 multiply by 4, it will give you 3,000. So now, because we firstly want to know how much they were paying before the reduction, we are going to add back that 3,000 to the 74,000. So we're going to say plus 70, that's plus 74,000, so that it can tell us how much they were paying before the reduction. So it will give us 77,000. So we'd have that 77,000 here, and you want to show your workings. Okay, so remember, it's going to be 77,000, and then you divide it by 14. It will give you the amount that they were supposed to get per month. So if you say 77,000 divide, but you can do calculations maybe on the side or somewhere here for that rent. But for me, because I'm using a smart pen, I won't be able to show calculations exactly like you. So you'll divide this by 14 and it will tell you per month we were receiving 5,500. Now the reduction is how much? The reduction is 750. So remember, we're talking about 2 months, so we're going to say 5,500 minus 750, and the answer that we get, we multiply it by 2, it will give us what we want. So if we say 5.5 minus 750, it will give us 4,750. Then this multiply by 2, let's do it again. 5.5 minus 750, it is giving us 4,750. Then this answer multiplied by 2, it is giving us 9,500. Now remember, this 9,500, in the past it made our income to be more because it was income received in advance. So meaning that we are owing those people. When you go to the balance sheet, income received in advance will be added to trade and other payables. So you'd say plus 9,500. Okay, so I hope you guys have understood that. Let's continue with the part of the question. Now the next part says, after taking into account the corrections above, meaning that after considering the information that is above, the adjustments above, they're saying it was determined that an additional of 85,250 is still owed. Keywords, still owed, meaning we have to pay SARS actually more. So we are owing SARS irrespective in the respect of the income tax. So at the moment, SARS, the provisional payments that we've made were not enough, so we need to increase. The assessment says that the tax that we've paid, it is short by 85,250. So meaning that in the incorrect net profit, we are supposed to increase this by 85,250. Okay, and then remember, because they're saying that we are still owing, this will become part of our current liabilities, because when we open next year, SARS will want their money. So we'd say SARS income tax. Okay, and then we know we owe them 85,250, and then you are done with this part of the adjustment. Then from there, what can we do? We can go to the next adjustment, or before we do that, let's just close off the account. So what I'm going to do, I'm going to calculate this here. So remember, we need to get the total here so that we can get the correct net profit. So 1,200,000 plus 85,250 will give us 1,285,000. 1,285,250. Remember, this is in brackets because the expense was not recorded at all. So if we say 4,918,950, we plus 123,600, and then we subtract 273,000, and then we subtract 9,500, and we also subtract 1,285,250. It will give us the correct net profit, which is 3,474,800. 3,474,800. Now this incorrect net profit, the correct net profit as it is after tax must be transferred to the retained income, and we know that it's supposed to be the same so that we can earn a part max. So you'd have 3,474,800. Okay, and then from there you can go to the next part of the balance sheet so that you can see whether you still need to record some things or not. So now the information proceeds here, and you see this is very long. You need to know how to manage your time. Here they're saying that for shares and dividends, the 26,000 shares were repurchased on 1 July 2020 at 3 rand above the average price. Now you need to know what does the amount above affect. This will affect our retained income note. Okay, so we need to go back to the note and show that repurchase of shares. Okay, so remember the repurchase of shares included 26,000 shares. So you will take 26,000 multiply by that 3 rand, and then you put the brackets to show that there's an outflow of cash because we are repurchasing. So if we say 26,000 multiplied by 3, it will give us 78,000. So that 78,000 will come here. Then you are done with that part. Next, they are telling us that the business did not pay interim dividends during the financial year. So meaning that there were no dividends that were paid. So meaning will not have final dividends. Okay, I mean, will not have interim dividends, will only have final dividends. So here they're saying a final dividend of 65 cents per share was declared on 30 June 2021. But remember, this was made available to you. You have already recorded it. And next, they're saying that 1,800,000 shares were in issue on 30 June 2021. So you come back here and check your retained income notes. If you check on dividends paid and declared, you will only have declared, right? You'll only have declared, and then it was, if you remember from our information, it was 1,170,000. So you can maybe make a little box here to show that you are going to transfer this to paid and declared and put brackets. So you'd have 1,170,000 here. So here they were not interested in you getting your opening balance. They are interested in this part. Normally a transaction like this one will have 2 marks and this one will be 3 marks, and then you'll get your full 5 marks. So at least we are now done with the retained income note. You are done with the net profit after tax. Then you can earn some few marks better than getting 0. Okay, so now let's now proceed to the next set of information that we need. Here they're saying 1,800,000 shares were in issue on 30 June 2021. This information is going to come in handy for us. We are going to need to use it, but we'll come back to it. Next, they're saying that debtors with credit balances. Now remember, if debtors have a credit balance, it means that debtors control is the balance is on the credit side. Okay, they're saying that, and it's actually a minus because it's on the credit side. They're saying that they were totaling to 11,000. They must be transferred to the creditors ledger. So you are moving these people from the debtors ledger to the creditors ledger. Normally I'll do it like this way. Okay, so those debtors, they have a credit balance of 11,000, but maybe let me start it so that you can see how I came to this conclusion. Okay. So at the moment, our information is presented to us like this. This is how the information is. This that has you are actually owing them. Now remember that a person can buy from the business and at the same time render us a service. Okay, so sometimes it will happen that we owe them, they owe us, something like that. Okay, so now they are saying that debtors have a credit balance. Remember, debtors controlled by the rules is supposed to have a debit balance by accounting rules. So at the end of the year, would have to transfer those debtors with a negative balance to the creditors ledger because we will be owing them. Okay, so now what do we do when we transfer them from the debtors ledger to creditors ledger? We have to apply double entry. Now remember, this amount is in the credit side, so meaning that when we take it out here, we'll have to take it on the opposite side. So we'd have debtors control being debited by it will be debited by creditors ledger. Okay, remember, an account cannot be debited by the same account, so we'd have 11,000 here. Now what have we done to the debtors control? We have increased. That's why we are saying a plus here. So we'd have a plus to the debtors control. Okay, now let's come back here. If we transfer this from here to here, remember we have debited debtors control, so meaning that double interest to be applied, the alternative account will automatically be credited, which means it will be a plus 11,000 in the debtors control also. Remember, double entry says one account debited, one account credited, so meaning that we are going to add by 11,000 on both trade receivables and trade payables. So this side would say plus 11,000, and also this side would say under trade and other payables will also say plus 11,000. Okay, then we are done with this transaction. Then we can go to the next one. Now here they're saying on 30 June 2021 GMO Ltd returned 10 ladies coats to the supplier bargain wholesalers, and they're saying that the selling price was 1,750 each. Firstly, we need to get how many items, what was the total items that we have. So if you say 1,750 multiply by 10, it will give you the total selling price of those items. So they cost, the selling price was 17,500. But remember, when you return things to the supplier, you don't return them at the selling price, you return them at the cost price. And here they're saying that the markup was 25% on cost. Now we know that when the information is like this, our cost price is always 100%. Our profit in this case will be 25 and our selling price will be 125. So what are we going to do? We will have then to find our cost price. We want the 100%. Okay, so I'll just do it shortly in the calculate. So we're going to say 7, and they said that this entry has not been recorded, so we need to record that entry. And remember, two accounts has got to be affected. You are retaining things, so meaning you are going to credit your inventory, and then you would have to debit something. Okay, because here they did not tell you something about the refund, it means that we bought from on credit, so debit our creditors control will no longer owe those people. Okay, so we're going to say 17,500 multiply by 100 divided by 125, so that it can give us the cost price of those items. So it's 14,000. So remember, we said we'll reduce our inventory and also reduce our trade payables. So we are going to minus 14,000 on the inventory side. So we'd say minus 14,000, and then we also minus 14,000 on trade and other payables. So we'd say also minus 14,000. Okay, and then from there we can go to the other part of information that we need. So now here they're saying a fixed monthly payment of 35,000 to cover the loan repayments and interest has to be paid for the full period of the loan. So meaning that they will continue to pay that 35,000 until they finish the loan. They're saying that interest will decline over the lifespan of the loan. So obviously the more you pay, the more your loan goes down. I mean, your interest goes down, right? And they're saying that the interest on the loan for the next financial year is budgeted or is expected to be 234,000. Now, how relevant is this information? This information will help us to determine our current portion. Remember, normally if we are not given that this particular figure will be paid towards the loan, we normally take our repayments and then we subtract the interest and loan and get our current portion on loan. But in this case, they've given us the interest that is anticipated for next year, so we can just get the difference between the repayments and this interest that is anticipated for next year, and it will give us the current portion on loan. Remember, the repayments that we've made amount to 420,000 is the same as that one there. So 35 times 12 will give you 420. So if we minus that 234,000, it will give us the current portion on loan. So let's see, 420,000 minus 234,000, it is giving us 186,000. So we have that 186,000 here. But you must remember something, that also you must do some adjustments on the loan. Remember, the closing balance of the loan was 4,028,000. So if we subtract that 186,000, we'll be left with the balance of the loan that will be disclosed on the balance sheet. Okay, so 4,028,000 minus 186,000, it is giving us 3,842,000. and then you'd also write it here, 3,842,000. Now at least we are winning. If you look at this, we are almost done, but we can continue with the rest of the adjustments. I'm about to go to work, so I'll just wrap it up quick. Now here they're saying that the following financial indicators were calculated on 30 June. They've given us acid test ratio. Now in terms of acid test ratio, this is what we need to know. We know that acid test ratio says that current assets, the formula says current assets minus inventory is to current liabilities. So if we say current assets and then we minus inventories and then we compare it to current liabilities, it will give us what we want. Okay, so let's check what is our current assets according to the information. Some information, remember, it has been inserted for you. So our current assets is 8,700,000, but we don't have the total of inventory, so we need to get it first. So let's see, 4,198,500 plus 675,500 and then minus 14,000 will give us it is giving us 4,860,000. So we have the inventories figure now. So let's go there and see what we have. So remember here we're going to have 8,700,000 minus 4,860,000. So let's say 8,700,000 minus the answer. We'll see how much we are getting. So we are getting 3,840,000. So I'm just going to write that 3,840,000 here. Now if you look at this, our current liabilities at the moment are not known, but we know that the results gave us 1.2:1. So meaning that if we apply the cross multiplication rule, we'll get what we want, right? We have 1.2x is equals to this multiply by this will give us 3,840,000. So it tells me that to get rid of this, I must divide by 1.2. Remember, you want to get rid, you want to be left with the x. So also this side you will divide by 1.2. So meaning that to get our current liabilities, we're going to say 3,840,000 divided by 1.2. Okay, so you will show it here that you are going to say 3,840,000 divided by 1.2, and then it will give you the total of your current liabilities. So let's see, 3,840,000 divided by 1.2, it is giving us 3,200,000, right? But we know that if you look at this bank overdraft, according to the information, it's a balancing fee. So we have everything except it, so we can use this total to get what we want. So let's do it quick. Let's add our trade payables, 1,253,000 plus 9,500, and then also plus 11,000, and then subtract 14,000. It is giving us 1,259,500. 1,259,500. So let's add this, the rest of this, and subtract from this. So let's see, 1,259,500 plus 186,000, and also plus 1,170,000, and then also plus 85,250. It is giving us 2,700,750. So if we say 3,200,000 minus this 2,700,750 will give us the balancing figure that we want. So 3,200,000 minus 2,700,750, it is giving us 400 and 99,250. So you see, we are left with just few things, and we are going to finish, I think, within the required time, or maybe a bit more by 10-15 minutes, because I'm explaining now. So let's see what else can we use. If you remember from the question, there was also another financial indicator. Here they're saying that net asset value, the NAV, is 5 rand 40 cents. So we know that the formula for net asset value, let me see if I can get the formula sheet. We know that the formula says it's supposed to be the net asset value shares. The formula is this one: shareholders equity divided by number of shares issued. So you can see that they divided by this. So when we reverse, we can take the number of shares issued and multiply by the amount that we got. It will still give us the shareholders equity. So according to our information, we know that they had for shareholders equity, we know that they had 1,800,000 shares, if you remember, 1,800,000 shares, and then they said that our NAV was 5 rand 40 cents, right? And this is similar to what was assessed. I think, I can't remember if it was a control test or what, but also in the either June or prep, it was also something like this was there. So you need to work on this, because you'll definitely get it. So 1,800,000 multiplied by 5 rand 40 will give us the total of the shareholders equity. And according to here, it gave us 9,720,000. So for us to get our ordinary shareholders equity, we'd say 9,720,000 minus 3,240,000. So let's see what are we going to get. If you say 9,720,000 and then you minus 3,240,000, remember, ordinary share capital is not known, so it's a balancing figure. So it will give us the ordinary share capital of 6,480,000. So 6,480,000. So we have our answer here. Okay, now we can continue. Now we know that the law says that our accounting equation says our assets should be equals to owner's equity plus liabilities. If you look at this, we do have all these things. Owner's equity, we also have all the liabilities. So we can just get the total here and bring it here, so that we can get other missing figures. So we have 9,720,000 and also plus 3,482,000. Okay, and also plus 3,200,000. Then let's see, let's check something. So we have 9,720,000 plus 3,842,000, and then also plus 3,200,000. Yeah, so you need to verify your figures. Sometimes we tend to put this the other way around. You find out you made 3,482 instead of 3,842. So be on the lookout for that. So we're getting 16,762,000. So it's supposed to have 16,762,000. Okay, so we have this also here, 16,762,000. Now would have to confirm with the calculators. 16,762,000. So it's the same. Okay, now if you look at this, cash and cash equivalents was a question mark to us. We have the total, we don't have cash and cash equivalents, so we can just finalize our trade receivables so that we can balance. So let's see. 3,668,810 plus 8,000, and then also plus 123,600, and then plus 11,000. It is giving us 3,811,410. So now we can just get the total of the two and subtract it from this. So that's answer plus 4,860,000. It will give us 86. Yeah, we have the answer, 8 million. So we're going to say, to get cash and cash equivalents, we're going to say 8,700,000 minus the answer that we have here, which is 8,671,410. So that's how you'll get your balancing figure. So let's see. 8,700,000 minus the answer. It is giving us 28,590, I think. Yeah, 28,590. So guys, this is how you were supposed to prepare for that question. I'm not sure if we managed to stick to the time, but I hope at least this is less than 1 hour long. Remember, we were supposed to do this within, I think it was 39 or 40 minutes. So it will maybe actually be more by some 10-15 minutes. So please, if you want me to assist you with this, you're more than welcome. We are running our contact lesson school, and then you can contact us. Our fees are explained on the description of this video. Thank you so much. Get in touch with us using the details that I've provided you below. Thank you. Shalom.